In today's fast-paced world, savvy professionals and entrepreneurs are perpetually seeking innovative strategies to safeguard their financial future while simultaneously growing their wealth. Visualize transforming your financial strategies with the same creativity and precision as you apply to your business ventures, unlocking new potential for growth and security. The innovative applications that I discuss in this video are going to highlight the versatility of life insurance, making it a valuable tool for your personal and business financial strategies. With just a little bit of imagination and outside of the box thinking, you can apply these wealth building techniques to your own world and change the trajectory of your family for generations. Life insurance is often viewed predominantly as a tool to provide financial security for loved ones after one's passing. And while the death benefit is the primary purpose in purchasing a policy, its potential extends far beyond this traditional role. Life insurance can be a versatile financial tool offering unique solutions to various challenges. Whether you use it as collateral for business loans or funding a buy-sell agreement, it can address your specific needs and ensure financial stability. Additionally, policies offer accelerated death benefits in the time of critical illness, which offers immediate cash benefits during tough times. Life insurance can also be used for estate equalization, ensuring fair inheritance distribution among heirs. Life insurance policies, particularly those with substantial cash value, can be used as collateral to secure business loans. When a policyholder needs funding for a new venture or to expand their existing business, they can leverage the cash value in their life insurance policy. This is particularly beneficial to small business owners who may not have substantial physical assets to offer as collateral. When a policy is used this way, the lender becomes the primary beneficiary of the policy up to the amount of the loan. This reduces the risk for the lender, making it easier to obtain financing. If the policyholder passes away before the loan's repaid, then the lender is receiving the death benefits up to the loan amount. After that, it goes to the beneficiaries that the policyholder wanted in the first place. Some of the benefits for using your life insurance as collateral are access to lower interest rates. Leveraging the cash value of a life insurance policy as collateral typically allows the borrower to secure loans with lower interest rates compared to traditional unsecured loans. This is because the cash value provides a secure asset to the lenders, reducing the risk and making it easier for you to get the financing. Flexible repayment terms. Loans against life insurance cash value often come with repayment schedules that are very flexible. Business owners can tailor these repayment schedules to align with their cash flow, making it easier to manage the repayments without straining your finances. Preserving business equity. Using cash value as collateral allows the business owner to access needed funds without diluting their ownership stake. This can be particularly advantageous for maintaining control over the business and providing long-term equity, as opposed to getting partners or investors that would take a part of the business in their dealings. An example, an entrepreneur needs $100,000 to expand their business. They use their life insurance policy, which has a death benefit of $200,000 as collateral. This gives the lender security and allows for the entrepreneur to have access to necessary funds. Investment opportunities. Life insurance policies can be structured to serve as investment vehicles. With a cash value component, policyholders can allocate funds to different options within the policy, such as with stocks or bonds or mutual funds. This allows the policyholder to benefit from market growth while enjoying the security of a death benefit. These investments grow at a tax-deferred basis, meaning that you won't pay tax on it right away. You'll pay tax on it later on down the road, usually towards retirement age. And at that point, your tax burden is going to be far less than they might be during your prime earning years. Leveraging life insurance for investment opportunities typically involves accessing the policy's cash value component. Policies such as an IUL or a traditional whole life insurance policy, they build up cash value over time because part of the premium that you pay is invested through the insurance company, and then they reward you for this investment by paying you what's typically known as an interest payment. Sometimes they're dividend payments. The cash value can then be used for whatever you would so like to do, such as a real estate deal or buying stocks or other ventures. The policyholder can borrow against the cash value without incurring taxes as long as the policy remains in force and is properly managed. Advantages of using the cash value for an investment opportunity, the big one comes in at liquidity. The cash value of a life insurance policy can be accessed relatively quickly, providing liquidity for investment opportunities as they arise. The preserved death benefit. Even when borrowing against the cash value, the policy's death benefit remains intact. It might be reduced at time of death to repay part of the loan if that is how you structure it, but it still remains intact and your beneficiaries would receive that after the loan payment is finished. Growth potential. Cash value in certain policies like IULs can grow based on the performance of selected indexes, providing potential for higher returns. Flexibility. Policyholders can use the funds for any reason that they see fit. Unlike when you go to a bank to ask for a loan, you typically have to tell them exactly what you're going to use the money for and how you plan to repay it. With the cash value of a life insurance policy, you don't have to do that. It's your money, you're accessing it, and you could use it for whatever you see fit. Estate equalization. Unlock the power of estate equalization to ensure fairness and harmony among your heirs. Life insurance can be an effective tool for estate planning, especially when it comes to estate equalization. This strategy is particularly useful for families with significant assets, such as a business or property, that cannot be easily divvied up among your heirs. By purchasing life insurance, the policyholder can provide liquid assets to one or more beneficiary, ensuring that each heir receives a fair and equitable portion of the estate. This method prevents the need to sell off valuable assets to satisfy inheritance disputes, maintaining the integrity of your estate and keeping family harmony. Advantages for estate equalization. The big one is it ensures fairness among heirs. The life insurance can help balance out the inheritance so that this way there's no animosity among people later on down the road. It prevents disputes and it prevents arguing. And that's a big thing for a lot of families to prevent. You want to make sure that people remain family afterwards. It simplifies the estate distribution. Life insurance proceeds are typically paid out quickly and directly to beneficiaries, bypassing lengthy probate processes. Protects the integrity of family assets. This is particularly noticeable when you have things like a family business or, say, a vacation property, and you don't really want to sell off parts of these things to fulfill the inheritance. An example of estate equalization would be a parent has 2 children. They have a family business that's worth about $1 million. So what they would do is one of the children who's interested in the business, they get the business. The parent then gets out $1 million life insurance policy with the other child as the beneficiary. So when they pass away, each child gets $1 million of value. Funding a buy-sell agreement. Life insurance can be an integral part of a buy-sell agreement between business partners. And what this is suppose you have a business with 2 people that are equal owners. Each partner would take out a life insurance policy on the other partner so that when or if one person were to pass away, the life insurance would be then used to buy out the deceased partner's share of the business. And what this does is it allows the family that's grieving access to funds relatively quickly, and they get a fair amount for the business, and the business maintains operations. The advantage to this is, like I just mentioned, it ensures continuality and stability in the business. It provides liquidity, and there's tax benefits for that. With the tax benefits, I would certainly talk to your accountant about that. An investment in a key person insurance. Key person insurance is a life insurance policy taken out by a business on its most valuable employees. Now, it's very similar to a buy-sell agreement, except for a few minor details that are different. In a buy-sell agreement, each business partner is the owner of the life insurance policy. A key person policy, the business is the owner of the policy. The importance to this is the life insurance policy, because of the cash value, becomes an asset to the business. The significance of a key person policy is, suppose you have a manager for your sales team and they're generating $1 million in revenue each year. If this individual were to pass away, your business would suffer a significant loss. You would have to replace the revenue that this person was generating, but you would also have to spend money in the recruiting process and hiring and training. The life insurance policy that's in place for the key person would help cover these expenses. And what this does is it ensures that the business remains moving forward and liquid. You don't run into any financial problems later on. Because in the case that I gave you, $1 million in revenue each year, that would be a significant loss, and you would definitely feel that. These innovative uses of life insurance demonstrate the versatility beyond providing a death benefit. By using life insurance as collateral for loans or funding a buy-sell agreement, investing in key person insurance, or even policy loans, the policyholder can maximize the value of their life insurance policy. By leveraging policies for business collateral or investment opportunities or even estate equalization, these techniques provide significant financial planning opportunities that are not often available for people who don't have life insurance in place. If you're ready to explore innovative ways to leverage life insurance for you or your business, email me, mvanhouten@myhst.com. You can give me a call, 239-294-7815, or you can visit my webpage at www.vanhouteninsurance.com. Until next week, stay safe.